is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show with crude oil today, folks. We had a very important thing happen this morning. You notice we've been watching this from the bearish side for quite some time, but today we actually had a beautiful signal pop up, and it worked for about $1,000 to start off with. But unfortunately, just as I'll cover this, Ruby, in just a second about the bearishness on all these commodities, but this is the crude oil. You notice we went right down to 68.55. The low was 68.25. We rallied just about $1,000, and I sent out a video, or not an alert, to raise the stop to the low of the day, which was 68.25. So that ended up with a $450 loser, and of course it's gone below $68 now. So I don't know where the bottom is. All I know is that these commodities are getting hammered. Wheat, well, not so much. I haven't checked wheat, but corn, beans, meal, all of these commodities are getting hit. I believe silver, look, gold, folks, gold hit 35, and it went all the way down to, it dropped $27 without even a heartbeat. And if you remember, one of the things that we mentioned yesterday, I believe, was when we were talking about the silver market. Let's get it up here. The importance of this level here in the silver. I just wanted to bring it up here and show it to you. You'll see here we were right up at that 78% level. We backed off about 10 cents. And if it gets above that, which it could, because you see the retracement was just barely at 382. Well, look what happened to silver, folks. You talk about the Indians getting around the wagons. Boy, this is exactly what happened. You'll be able to take a look at this. You'll see we went all the way up to the 78% level. We jumped, well over 30 cents an ounce, got up there to 26.09, and have dropped we dropped 80 cents, $4,000, similar to what we've done in the gold. So a lot of volatility going on. So the reasoning for our trade in the short side of gold, of course, was the 3 drive pattern that we had on Friday. Got a nice break. It broke about 5 handles. We covered it just below around 69.80 yesterday, and today we tried the long side, and it certainly didn't go anywhere. I want to take just a minute. I got more emails yesterday than any time in all my 14 years here at TFNN, and let me try to explain what happened. We were watching Amazon, folks, if you'll remember, and we were talking about the fact, and this was just what you call coincidence. It was trading at around 3,300, and we were explaining that was 2 standard deviations down at that point. Now, the reason for that's important, because if it goes below that, then the option sellers, the people that sell these puts and sell the calls, they're in trouble, and they have to get in and cover, and that's when they get it. So they have to defend their position at that level. And this was, remember, a 5-minute chart. It went from 33 all the way up to almost $100 an ounce to 33.90. And, of course, that bails them out, because then they can work around that position. But that's what we're watching. Remember, folks, these options are so much bigger than the commodities that it's just amazing, and the stocks, because the European option model combines, several things: the market price, strike price, the risk-free calculator, time to expiration, and the standard deviation. And the standard deviation is what keeps it glued together. I know most of you people have been to school and seen the bell-shaped curve, what the standard deviation is like. If you go to 84%, 12%, that's why 2 standard deviations is so very, very important. So you need to keep that in mind. You don't have to, be an expert in it. You just got to learn to do a thing that helps it, because if you're looking at the S&P and these other things on a Friday, they base the VIX on this, and the VIX is simply a percentage move that they're expecting the S&P to happen. And if it goes beyond those expectations, something's wrong, and these people have to get out there and cover their options. Go look at the open interest, folks, at the CME for the open interest on the copper, and look at this. You're unbelievable. It's 6, 7, 10 times more than it is in the futures. That's it's very interesting. So let's keep watching this as we go forward, looking at some things. But I appreciate all the emails. I answered all of them, and but that's the main thing, is that when you get beyond 2 standard deviations, just for kicks and giggles, folks, go look at Clorox, CLX. 2 days ago, it was 8 standard deviations beyond the mean when it gapped down. The biggest drop it's had in 20 years, I guess. But anyway, and Clorox is everything, for the hand stuff because of the COVID and stuff. All right, let's get back to the markets. Another one, right on the money, folks. We got to pay close attention here. This is natural gas. We've been following natural gas. We talked about the fact that it was looking pretty bullish. We had that 5-day minor correction, and you notice we got up to 419. And if you'll remember, folks, from the old time weekly chart that we've been pointing up here, we'll just get this up here. This is the weekly. You'll see we've taken out the high 3 weeks in a row now, and we hit the exact price today. Well, we went above it. The high was in 786 was 419.90, and we got to 420.20. So that should be a pretty good top in natural gas. If it's going to make a top at all, that would be the area that you would be looking at it. So remind yourselves that these things don't work all the time, but when they do, they work pretty good. There's another one that's very interesting. We'll have Shane Smolian as our guest, folks, at the break. I forgot to mention that. We were talking about yesterday the importance, and I hope you remember it, but we were talking about the fact that we were right up at that level in the T-notes, where if we got a little bit higher, just a little bit higher, and that's exactly what we did. The high the other day was 135.08. We went to 135.14 today, which was an exact to the tick, 50% retracement from the high last July, and the market has already reacted. The bonds are down 2 points, more than 2 points from the high, well, a little more than 2 points from the high, and the bonds are almost a point. So that's a major reversal today in the Treasury notes and Treasury bonds. So we'll see if that's the case. We'll do one thing at a time as we look at some of these. If you have any questions, it's 877-927-6648. So let's look on to the next one. This is where we were yesterday in the S&P. I wanted to bring this to your attention. You'll see here that we have this ABCD pattern down there at 43.66. The low was 43.65.25. Then what we did in the matter of just a few hours, and this is what happens when these people, these algorithmic traders get in there and start pushing the market. Nobody can stand in front of it. You'll see what happened here. The market went all the way up, and it's now made the 3 lower highs. That's a 135 pattern. And so that's what's been happening. Now, if we go below that 43.68 now, then there's trouble in River City. So until that happens, everything is going to look okay. And notice, if those of you that followed it after it got to the 44.16 level, it just stayed there. I mean, it just didn't go anywhere. It backed off to 07.08, stayed there the whole night, and then this morning it started coming apart. So we'll see, and we'll be able to see if that's going to be a case. All right, those are what we're watching here, and we'll move on to the next one here, 877-927-6648. We're going to have a break coming up. I want to discuss just a tiny bit more of the chart that we got from Elliott Wave. This is very interesting because it shows how the news is misinterpreted. I'll be right back, folks.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're taking a look at this chart that shows the European stock market performance versus the S&P. The S&P is on the top, the others on the bottom. Now you're seeing news items that the European stock markets are all outperforming the stock market in our country by a lot. All you have to do is look at this chart over the last 30 years. You can see that that is a fallacy. That's false information. Yeah, they might be doing it over the last few days, but on a long-term basis, we are far, far superior. You can see the fact that we're up 176%, and I don't know exactly the percentage that they're up, but you can see that it's far, far, it's just barely taken out the March of 2000 highs, and we're at 1.78% expansion of that. So that's a situation. So when you hear that stuff on there, defy human nature, go and look to see what you're watching to make sure that that's what you're looking at. Now, I wanted to bring to your attention, someone asked a question yesterday about that time count that they were using in the Elliott wave. I'll bring this up here because all it was is basically what they were looking at was a similarity between the year 2007 and where we are now. You can see that divergence. That was 84 trading days between the two of them. And then all the Elliott wave people did was to come up and take that and move that 84 days and to see where we were in the same context. As you can see here, we're having the same type of a situation where the Dow Jones is a little bit higher, but that Dow Jones Composite and Industrials is a little bit lower. That's just a divergence. They're showing it that has to be 84 days. Well, 84 days was yesterday, and we had this big 270-point move to the upside, and now the Dow is reversed and was down more than 300 a little while ago. I think it's bounced back a little bit. But those are just some of the things that we're watching here today, because we're seeing this tremendous volatility. Whenever you see the market that can make this type of a move, and we're talking about 300 and 400 and 500 points up and down, this is not bullish, folks. The bulls don't like it and the bears don't like it, but who's ever going to win this battle will be known very, very soon, because if we can bust out of this to the upside and close at a new high ground, somewhere about 44.40, something like that in the S&P, we could easily go a great deal higher. But whether that happens or not, we have to remain to be seen. So the key takeaways from the show so far this morning is the fact that the notes made a higher high by just a couple of ticks, exactly at the 50% retracement level. The fact that the bonds didn't take out the high, it missed it by 2 ticks. It was way behind. There was another sign of market weakness, divergence, and it stayed up there at around that 66.30 level for quite a while, and then broke 2 handles to the downside. The notes all started to come off. So this was a major point. The problem that I'm seeing, just looking at some of these, is that we've had some big moves on the upside in the grains with tremendous bullishness. And folks, like I've been saying in the videos and stuff, these things look like they want to go lower. I mean, we did get filled dismissed getting filled in the corn by just a couple of cents, and it took off, and then it's come right back. The beans have been taken out lower lows. Soybean oil has taken out lower lows. Soybean meal has taken out lows, and this is with very, very bullish situation, folks. This is the market telling you that there's something not right. And I don't know what that is, but all I know is that that's not right. Whether it's going to be right in the long run, we have to wait and see. But that's what we're watching as we look at some of these things here this morning. So that's it. What I try to do when I give you these, folks, I give you a lot of information. Some of it, may or may not stick to you, but some of it works, some of it doesn't. Remember, it's all about probability and about the amount of money that you don't want to lose, and that's the whole key of what we're watching here as we look at some of these things here this morning. So I hope I make myself clear on that, if it's clear as mud as I can get. But that, I know it's hard to understand the standard deviations. Just give it a little time and you'll get used to it, because it'll keep you in the direction of the trend. See, we haven't broken any one standard deviations in any of these stock market indices as of yet. And when that happens, then you can turn bearish. Now let's play a little game here today. Let me get this up here, because we've had our good friend Hood is in the mood today, and it's had one heck of a move. I just want to show you just how some of these things that we use work. Just to give you it, let's get the 5-minute up so we'll be able to see it pretty easy here. What I'm watching here, let's get this up here. Here again, there's no options on Hood, I don't believe, or on, so you're not going to see any option plays on this, but let me get this up here so you'll be able to see what I'm watching, and then you can see if it works or not. That's the main thing. Sometimes they do, sometimes they don't. This is absolutely a perfect type setup. Now, I don't even know if you can short this stock or not, because I don't think you can get the shares if you need that anymore. But just looking at this, now remember, this is just a 5-minute, but it'll work on dailies, whatever. But this is what you're looking at in Hood. Once we took out the high of the opening indicator, which was 40, that was it. When we took that out, was 40, was the high at 40. We went from 40 all the way up to 52. Then we backed off a little bit, and the real explosion took off is when we almost doubled in price, and the market went from 52 to 86, and then it went from 86 all the way down to 56. It dropped 30 handles. Well, if you look at this ABCD pattern back would come up to 67.40. We're at 62 right now. Now, believe me, there's nobody in that Robinhood group that's looking at anything like this, but this is a perfect sell signal. I'm going to follow through with this tomorrow. We'll have Tommy Hugard on as our guest, hopefully, and we're going to watch to see if it actually worked or not. Because if you're selling this stock, your sell would be right at around 67.05, something like that, and you got to risk about $3-4. I'll say $4 on this, because it's so volatile. If it can go from 86 down to 56, $4 doesn't seem like much. So that's what you're doing, is when you're trying to put these patterns together to get a place where you can quantify what your risk is. Do you know what's going to happen next? Absolutely not. But you know what, boys and girls, listen very carefully. Nobody else does either. So that's the one thing that you want to remind ourselves, that you don't need to know what's going to happen next in order to make this thing work. And that's the whole thing. Now, let's just give you a quick heads up here in what I'm talking about on some of these commodities that are really starting to fade quite a bit. And that here is one I want to get up here. You can see in the soybeans the fact that we have these really, really bullish scenario coming in here. And you'll notice all you're doing is you go up to a 382 retracement of the high from July 30th, and boom, down you come. So you got to pay attention to those too, because the market is starting to weaker up. I've had a request to take a look at Dr. Copper. Give me a second here, and I'll get Dr. Copper up. It has been relatively weak, but let's just get it up here and see where we are. Yeah, it's still starting to go lower. Let's get the chart up. So we better do the hourly because it's easier to see. And you'll be able, there we go. You'll be able to see here that we are still moving lower in the copper market. And I believe that we're probably going to, shut the front door. Hold on just a minute, boys and girls. Get this back up here. Shane Smolian will be our guest at the break. I see we're making lows from yesterday, and we're starting to break down even more. You can see the 61% retracement up there at 456, and now we're starting to move lower. So that's what we're paying attention to here early this morning. We got to pay a few bills pretty soon, and then we will have none other than the Wolf Trader himself. Shane Smolian will be our guest. And also, I think we're hopefully having Tom Hugard on tomorrow, depending upon market conditions, of course, and who knows what that's going to happen. So we'll be back right after the break. Sarah, any chance I can have?
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolian, the wolftrader.com on the line. Shane, are you there?
Good afternoon, Larry. How are you?
Living the dream, my friend. How about you?
Good. I've been enjoying the Olympics. Have you been watching any of the events in track and field and gymnastics?
Oh, well, I don't know if you know this or not, Shane, but in the 1960 Olympics in Mexico City, I was a participant.
Really?
Not many people. Yes, sir. I was in the Olympics. I was in the knife and fork division, and I got an honorable mention in tacos. Anyway, no, I don't watch any of that stuff because you can't bet on it. I don't bet on any of that stuff. But no, I just can't grab myself without the crowd being in there, because the crowd's what makes everything screaming. I can still remember Bruce Jenner running around with the American flag, after he won the decathlon and stuff, and how exciting that was.
Yeah.
Yeah, now he runs around with something else in his hand, so I don't know what quite that is. All right, let's move on here, and we will show us what you're looking at today, my friend.
Well, this is just a quick summary here. We're going to talk about the gold standards again, and then we'll get into the stocks, some of the stocks and ETFs, S&P gold, and then I'll have a quick question and answer at the end there. Real quick, if anybody wants to get a hold of me, you can reach me, Shane, at wolftraderfutures.com, or it's www.wolftraderfutures.com. And so you guys know how to reach me if you have any questions. So one caution here about using fragments, just to put it out there, that the updates that we talk about here depend upon the daily Fed information. So if you see something today, there's a big gap between the week or the next week. So just be careful about that. It's not a one-size-fits-all forecast. These things are subject to change with the Fed. So the concept of the gold standard is this, that we always want to be researching and simplifying the top strategies that work. And so what I'm trying to do is always keep things simple. And so I want to focus on the concept of just simplicity, directness, and discarding what's not working and focusing on what is working. So very quickly, on the S&P, our gold standards are the Fed juice internals, which has been very good for us going back since August. The double optimized lunar cycle, which is a double optimization of Astro. It's another way to look at it. It refines it further. And then the optimized Bradley, which has been performing very well. So when you see this on the chart, you're only going to see these three colors here. The Fed internals are here in the blue, the optimized Bradley's in the pink, and the double optimized lunar cycle is in green. So that way, we have a very clear picture about what is important. The most important being the Fed juice internals. And then on the other symbols, the two main focal points are the Fed juice 3.0 and the double optimized lunar cycle.
Shane?
And so, yes.
We have they're not showing any charts into the room. Do you have your charts posted?
Yeah, from what I can see, they're showing up on YouTube. I'm looking on YouTube here.
Well, I guess they're not. I don't know how to handle that, but go ahead, continue on. You got great information. We can always pull these up later.
Sure. From what I can see, it's showing up on YouTube. But most of the other charts focus on the Fed juice 3.0, which is really a very important guiding focus for the trend here. So the red arrows are the Fed juice, and this is an optimized trading system. It captures the flows of the Federal Reserve as it affects each specific market. These are neural networks, so each market will be affected differently by what the Fed is doing. And then the green arrows are the double optimized lunar cycles. So we use those together to get an idea about the markets. We did start a new Fed juice ETF service, and this is based upon Fed juice 3.0 signals. And these are updated daily. So this is a daily service. This is not a monthly newsletter, but we just update the signals daily for subscribers. And it's been doing very well. Actually, the stocks are doing better than the futures. Many of these are. So there's two parts here. The basic part here is a portfolio, which is 10 symbols. I'm going to build this up to 10 symbols. We're at about 6 now. And then I'll have some meme and some penny stock plays into there. And the basic idea is that we want to pick only the stocks that optimize well with the Fed juice 3.0. And that's very critical because every stock does not optimize well. Futures, you're kind of limited. What you see is what you get. But with stocks, we have a lot more information to look at. And we're assuming $10,000 per symbol. And the same thing with the meme and the penny stocks. These are trading systems that are always in. It's capturing the flows of what the Fed is doing. These are the symbols we have right now. Gold miners, Apple, Tesla, Caterpillar, Broadcom, and we actually just added Bank of America. So gold miners has been there since December. It looks really good. Most of these look good so far from what I can see. So let's take a look at these charts here. This is the actual gold miners here on the board here. Now, what's interesting is that this whole time that gold was trying to go up, the Fed juice did not go into a buy. It just went into a buy on 8.2. So today we've had some wild action on gold, but this is the first time now that the gold miners and gold are both going into a buy pattern. This was this morning. Obviously, gold is doing a lot of volatility today intraday, but that's how that looks. So that is in a buy. Apple, this has been beautiful. I mean, this is off. I think this is the best Fed juice of any symbol of any futures that we've seen. This went into this buy on 6.18. It goes into the sell on 7.26, and it just went back into a buy on 8.2. So it's still in a buy today, but it looks like it might be trying to cross down in the next day or two. Tesla has been very good. It's been capturing these rolls very nice in the market. That's still in a buy. So Apple and Tesla are still in a buy today. So it doesn't look like there's an imminent breakout coming on those. Broadcom has just been kind of sitting out there in a sell for quite a while, but it's not really going anywhere. It went down initially, and then it's just kind of going sideways. And you'll notice that each of these have their own personality. Like Tesla trades a lot, but Apple barely trades. Apple's looking for the trends. So that's what we want to see with these. We want to see each one being specific to the symbol. Caterpillar's been doing very well with these rolls. We also put a double lunar cycle on this one, but most of these just have the Fed juice. But again, Caterpillar's doing well. It's a nice rolling stock, and it corresponds well with the emerging markets. So somebody asked me to put emerging markets on here. Emerging markets did not optimize well, but Caterpillar does. So that's kind of my workaround for the emerging markets for people who want to see that. This is Bank of America. We just started tracking this on 720. Again, it's doing a good job of capturing these rolls. It's been in this sell since 729. And so I'm pleased so far with how this looks. I mean, this is a good start, and I really have to be careful about the stocks that I add because I want to make sure there's a lot of liquidity, and we're looking at mid to large cap stocks, and I don't want to get a symbol that's not going to optimize well with the Fed juice.
Steen, when we have the break coming up here, could you check with TFNN and see how we can get the charts for the folks? Because some people still don't see the chart. Maybe you could work out a way they could post them for you so the folks could get an idea of what you're looking at.
Sure. Maybe I can Skype them over to you when I'm done.
Yeah,
no problem. Just let me know.
That sounds great. Now, one other question that someone asked is, on the astrology front, is there anything that would be indicative of a market making a top-up in here? That's a question from a listener in New Jersey.
Yeah, August is a pretty negative month. I mean, if you look statistically back at it, it tends to be the worst month since 2009.
Okay, we'll be right back, folks. Shane Smolian, thewolftrader.com. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader. Shane, there's a question from someone in Tucson, Arizona, sitting right here next to me. Oh, wait, it is me. When is the next major Bradley date?
Well, I usually optimize around the 9th or the 10th of August.
Okay, so we're talking about 8-9 days from here.
Yep.
Okay, thank you. Continue, please. Sorry to bother you. Go ahead.
Sure, no problem. S&P, so the Fed internals are still in a sell, guys. It's been in a sell since July the 6th. We'll talk about that. The sell signals are now aligned to the downside, but as you mentioned, Larry, earlier in the show, the S&P is extremely volatile, and that's typically not the case in bull markets. So it's interesting that we're seeing this price action. I think a lot of this right now is that the market's being restrained because the Fed is pulling back. It's really going to depend on what the Fed does. The fear and greed is peaking with price, and tech is starting to show a negative divergence. So what do I mean about the negative divergence? Well, if you look at technology right here, this is the S&P 500 up here, and this is Apple. And you can see that if you go back to February the 8th and May the 3rd, there's a divergence indicator down here. And every time that this divergence starts to form, the S&P makes a top. In other words, the technology turns first. And so that happened on February 8th and May the 3rd, and it's happening again now. Now, it hasn't turned just yet. It's very close to turning. But we have a similar pattern starting to develop here where technology is getting weaker ahead of the S&P. So I just wanted to point that out. This is the weekly Fed juice, and this is the first time we're seeing a deflection lower on the weekly time frame in a while. It's been really, for most of 2021, it has just been pushing up. And now we're actually starting to see some weakness develop here. So I think this is something to be concerned about, and I think it's going to show up coming down the road here. And I know it's not showing up yet, but fear and greed index is still very low, which is bizarre for being at all-time highs here, but that's just what it is. I also have now a Bitcoin fear and greed, which I found online. Just something to look at. That's still relatively in a fear mode too. So I guess everybody's afraid, right? Again, here's the weekly Fed juice. Not ideal here. This is not good. If you want the market to be surging higher, you don't want to see the Fed juice falling like this. And it hasn't manifested yet, but I think there's a good chance that it will. And this is a breakout level. This is a intraday chart here just to show you. So right now that breakout level is 43.89 or 43.90. This updates about once an hour. So it's been oscillating back and forth here. It hasn't really been going either way. But the big chart here that I think is the telling chart here is the Fed internals, which is still plunging since 7.6. And I just think there's a reason to be cautious here. I just have not seen the S&P ever rally when the Fed is plunging like this, and it hasn't happened once since 2009. So we've seen some interesting phenomenon here, because this goes into this sell. First, it goes like it's going to sell off, and then we just get this range into here where it just really can't do anything without the Fed here. So it's just a lot of posturing back and forth. This is the chart that I showed before, where you have the Fed internals in a sell, you have the double lunar, and you have the optimized Bradley. You have the trifecta here in terms of sell signals. Now, whether the S&P is going to do it or not remains to be seen. It seems to be holding ground here, but like I said, when these Fed internals are plunging that severely down, it's really hard for the S&P to do anything. So, I think it's holding it in check at least. I still think there is danger here for the S&P for sure.
Well, it's good information to know.
Sure. Any questions, or want to go on to metals now?
Yes, someone last question about the gold and silver. If you want to cover those next, would be great.
Sure. Okay, so metals, this has been very interesting because the metals have lagged. We've been in this positive seasonal. This is supposed to be gold's heyday right now, and it goes up for maybe another few weeks. But gold has essentially wasted most of these seasonal lows. It hit the low, and the seasonal pattern was supposed to be going up, and gold's just been kind of meandering around. The Fed juice never got in sync with that. It's been in a sell, but finally the Fed juice did go into a buy. And it appears that gold may be trying to make some type of a late bid here. I don't know if there's much time left, but I think that it might be trying to do this. Now, this is an interesting chart. I want you to see, this is intraday. This is gold here versus the dollar, and I want you to see how sensitive gold is to the dollar. This was taken in the morning, and you can see here that the dollar in this case is down in the morning. I'll go ahead and highlight this. I'll circle this. The dollar is down in the morning here, and gold is up here. Right? But if you just go forward a little bit later in the day, what you'll see is it has a complete reversal. So watch the dollar down. If I go forward later in the day, you'll see now the dollar goes up here and gold collapses. You see this right here? So look how sensitive this is. The dollar goes up and then gold does this U-turn and comes back down. So intraday, it's very choppy, very, very volatile, very unpredictable. But I always like to defer to the Fed juice when things look crazy, because it's very consistent across time. I mean, this thing, since its inception, since June to June of last year, it's up 500 points just following these signals on the Fed juice. And like I said, the Fed juice is longer-term flows of the Fed. It's not short-term trades. But this did just go into a buy on 8-2, and gold has a few more weeks here. So I think it's reasonable, and I use the word reasonable because, nothing is for sure, but I think it's reasonable. It will try to come back up here into this gap that was set during that Fed meeting in July. I think it's reasonable as long as the Fed juice stays in a buy, which is the big thing, and this is a daily signal. But as long as this stays in a buy and you have positive seasonals, I think there's a good chance it might try to go up there and fill that gap from that Fed meeting, which, I think it's reasonable to think that it could try to do that. So, we'll keep our fingers crossed here, but as long as the Fed juice is positive, then generally, gold has a chance now because you have these positive seasonals going up. But it's been tough because it just went sideways for so long, and you had these rising seasonals, and you can just see here that it really just wasted this opportunity. You had this big positive seasonal coming up like this, and gold just went sideways. In general, that's a bearish sign. I think coming up later into the fall, that's bearish. But for now, because this is in a buy, the charts are telling us that it's got a chance to start moving higher now. Whether it moves all the way back up to that gap, I think that's a reasonable target. I think it's reasonable to think that. Now on silver, you see a similar situation here. You see that the Fed juice is also in a buy here, and the tough thing intraday is, again, you can see here on silver that it did this wild reversal. It was up big today, and now the candle looks like this, which is bearish. But I don't worry too much about the candles on the futures. I just follow what the Fed is doing. That's the main flow here. Silver has also been very successful with the Fed juice since its inception, going back. This one goes back to about April of 2020, but this has been very successful too. So I'm happy with the way that it looks. We have been looking into the Astro inversion model. So Larry, as you know, the Bradley and other types of Astro symbols can invert. We'll talk about this after the break.
We'll be right back, folks, with Shane Smolian, wolftrader.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian. And Shane, we have a question from Alan. He's asking, you know that the Fed buys between 80 billion and 40 billion mortgage-backed securities and bonds a month, but do they do it by daily, weekly, at the end of the month? And what increments do they use? Is that in public domain or not?
They release that information. You can go to the New York Fed. They release it in spreadsheets, but it depends. They have different schedules. They usually put it out ahead of time to give target ranges. It's about 80 billion in the treasuries, 40 billion in mortgage-backed securities, and currently you want to hear a scary statistic? They hold about 1/3 of the mortgage-backed securities right now. So it's pretty intense. The Fed holds about 1/3 of the housing market. All right, very quickly here on a chart. So just to answer the question, you can see this on the New York Fed website. On this chart here, I want you to see these dots here. I don't know if you can see that, Larry. There's these green dots on the chart. That's called the BAT indicator. I call that the Breakaway Trend. It's a trading system. It tends to it's based on overlay. So when it breaks through that, it tends to go to new trends. The downtrend right now is 43.61 on the S&P futures, 43.61.75. If it goes below that, if it closes below that today, that will confirm a downtrend. But it's creeping up So I think that the S&P, if it's going to go up, it's going to have to go soon because that is creeping up on it. So that's a technical indicator, but I like it a lot, and it tends to do very well. Also, I talked about this astro inversion model. This is a model this is like the holy grail of cycle analysis because it measures the inversions. And this went into a sell on the S&P on 726. It's still in a sell. So this nailed that high to the day, and it's still in a sell. So as far as I can see right now, I would definitely err on the side of caution. I think the S&P is in it's in a danger zone right now, and it's still kind of stalled out. But as long as the Fed is weak, there is a chance that this will fall.
One of our listeners just said it's in a danger zone when it opens, and it stays that way till it closes each day.
You got that right.
Thanks for joining us. Shane Smolian, WolfTrader.com. Stay on the green side of the grass, folks. See you tomorrow.
Building wealth